Today we are going to discuss a very important topic of audit procedure. To put it in one sentence, audit procedure begins with the appointment of the auditor and it ends with the auditor giving the audit report. Now, whatever happens in between, that is appointment of the auditor and his giving an audit report, that constitutes the audit procedure. I have broken down this subject under different heads so as to make it easier to remember and to reproduce in the examination. Before the actual audit procedure starts, the first thing which the auditor has to see is whether the appointment, his appointment as an auditor is valid, whether it has been legally made or not. Once he gets a confirmation on this, he can proceed with the audit. Now, as far as audit appointment is concerned, it all depends on the nature of audit, on the nature of the audit entity. For instance, if it is a company audit, then the auditor is appointed by the shareholders, except of course the first auditor who is appointed by the board of directors. Now, he has to obtain a letter from the company stating that a general body meeting has been held on such and such date and he has been appointed as the auditor. If it is any other audit, for instance, there is an audit under the Sales Tax Act, there is an audit under the Income Tax Act. Now, for these things, an approval by the general body of shareholders is not required. So, he only has to take a letter from the board of directors, that would be sufficient. Again, as I said, it also depends on the nature of audit. If it is a statutory audit and if it is a company audit, then the shareholders' approval is a must. But if it is an internal audit, then it is not necessary that the shareholders should approve it. The board of directors or the committee which is appointed for audit, it can take a decision and it can give an appointment letter to the auditor. Now, once the auditor satisfies himself that his appointment is in order, he has to proceed with the actual audit. Now, the procedure again starts. What do you do as soon as you have an appointment? The first and foremost thing for an auditor, especially when he is doing the audit for the first time, is to know the nature of business of the entity. He has to create a master file containing certain vital information which would be useful not only for the current year audit, but it would be useful in future also. So, what he has to do is he has to have a thorough knowledge of the nature of business, how it is operating. Now, when you talk about nature of business, I have split this into various points. The first one is organization structure, he has to know about it. The second one is key personnel. The third one is the questionnaires which are to be issued to various departments. The fourth point is regarding obtaining some documents like memorandum and articles, and the next point is regarding the previous year audit report and financial statements. Now, we will very briefly discuss all these points one by one. The first point he has to know when he wants to create a master file is to have the organization structure. How is the concern organizationally structured? What is the hierarchy? Who is who in the organization? Who has got what powers? Especially relating to financial transactions. Is there a separate department for each of the functions? For instance, in a big company, you will have a sales department, you will have a marketing department, you will have a purchase department, you will have an inventory department separately. So, when these things are segregated, you ought to know as to what exactly is the function of each department, then who is holding key positions in the organization. If you have an audit question, if you want a clarification, then you should approach whom, which official you should approach. That is the key personnel. Now, once you know who is there in the organization, who is holding which position and what are his powers, the next point is the auditor generally gives a questionnaire to different departments to elicit information. For instance, he will give a questionnaire to the sales department as to how your particular department is structured. How are the financial transactions taking place in your organization? There will be 20 questions, 30 questions. The answers which the auditor gets for all these questions are very relevant in conducting the audit subsequently. So, each department would get a questionnaire from the auditor, and based on the questionnaire, based on the answers to the questionnaire which has been given, the auditor will form an idea as to what exactly is to be done, which area is weak, which area is strong, whether he should concentrate on all the areas equally, whether he should eliminate a few areas. That would be decided once he gets the answers from these various departments. Now, the next point is, when you are doing the audit of a company or a partnership firm or a proprietary concern, you need to have the basic documents. For instance, if you are doing the audit of a company, the basic document is the memorandum and articles of association of the company. Now, this document is very important because this will not only tell you as to when the company was formed, it would also give the objects of the company, why it was formed, what is its nature of activity, what is its nature of business. That is very important for you to begin the audit. It would also give the initial subscribers, the initial shareholders, the initial directors of the company, what are the rights and duties of the directors. All this information would be contained in the memorandum. Now, similarly, if you are doing the audit of a partnership firm, then the basic document is the partnership deed. Now, the deed would give the names, addresses of the partners, it would give the shareholding pattern, it would give where the registered office of the firm is situated, and it would also give you what is the nature of business of the partnership firm. So, this is all vital information. Auditor has to store this information in a master file. Similarly, if you are doing the audit of a trust, the audit of a charitable organization, of a society, then the bylaws of the society, the trust deed is a must. All these things would go into the master file of the auditor. This is part of the audit procedure. Unless he has all this information, he will not be able to proceed further with the audit, he will not be able to do the job, he would not be able to justify the job properly. So, all these documents would form part of the master file which has to be maintained by an auditor. The next point I have said is that every auditor, before he begins the audit, he has to go through the previous year audit report and the previous year financial statements. Now, the previous year audit report and the financial statements together with the notes thereon would throw up a lot of information on the entity. What is the nature of entity? What was its performance in the last year? Which is the area which is strong in this company? All this information you will find, the auditor will find in the financial statements of the last year. Similarly, as I said, every auditor has to go into the previous year's audit report. Now, he will have to look into the qualifications made by the auditor in the previous year, the notes which form part of the accounts. Those things also are to be taken into consideration. So, he has to obtain a copy of the previous year's audit report as well as the financial statements. Now, all these things which we have discussed, that is obtaining basic knowledge about the client's business, the client's organization structure, the key personnel, the basic documents like memorandum, partnership deed or a trust deed, and the previous year's audit report and financial statements. All these things would form part of the master file which every auditor will maintain. Now, once this job has been achieved, the next very important thing before an auditor goes into the actual audit part of it is that he has to study the internal controls existing in the company. Now, this is a very important area which no auditor would forget, which no auditor would give a go by, because in every organization there is an internal control, there is an internal check system which would be functioning. I will give you a small example as to how this internal control system actually works, how it has to be studied. I have taken the example of a ready-made garment dealer in the city. I have taken two different entities. There is one entity on one side which has say 5 salesmen and the proprietor, that is the boss. So, in the shop there are 5 salesmen who are actually showing the goods to the customers, who are making the bills, who are packing the material, and finally the boss sits on the cash counter to take the cash. Now, this is one system. Here there are several problems. Problems in the sense that internal controls may not be proper. The reason is that these 5 salesmen who are handling the actual sale, they are showing the goods to the customer, they are making the bill, they are packing the goods. At every point there can be a problem, there can be an error, there can be a fraud. A fraud is something which is done intentionally, an error is something which is not done intentionally. So, in this setup there can be a situation where all these 5 salesmen who are there, they can commit an error while showing one piece of material, they may give the price of another piece. While packing the material, they may pack 2 pieces instead of 1 piece. If the material is priced at 500 rupees, they may bill at 400 rupees. Now, all these areas are weak points. The proprietor who is sitting on the cash counter, he is only taking care of the cash. Now, in this situation, all these weak points are to be noted. When the auditor takes up the audit, he has to see that yes, these are the areas where there are weaknesses. Now, is the proprietor doing anything to counter these weaknesses? Is he checking each and every material? Is he checking the price of each and every garment which is being sold? Is he checking the package of every customer so that no extra material goes? Now, if he is doing it, then yes, all the internal control procedures he is taking care of. But here also he may not be able to justify that in several situations, like in the festival season he may not be able to do that, which means that there is an inherent weakness in the internal control. Now, on the other hand, you take the example of a big garment, ready-made garment trader, where there are about 50 salesmen. There are about 50 salesmen who are in different wings of the shop. Somebody is taking care of the boys section, somebody is taking care of the gents section, somebody is taking care of the ladies section. Now, here in a big shop, I'll tell you how the internal control system works. Now, when a customer comes for any item, he goes to a salesman, the salesman will show different types of material. Once he shows that, his job is to convince the customer that yes, this is good for you. Once the customer is convinced, the job of the salesman is over. What he will do is, he will take the material, he will go to the billing department. In the billing department, the person sitting on the counter, he will make the bill depending on the material. Then this material, when he makes a bill, he will make 4 copies of the bill. 1 copy would be retained by the billing section, 2 copies would be given to the customer, and 1 copy it will go along with the material to the dispatch section. So, once again 4 copies have been made of the bill, 1 copy is retained by the by the billing counter, 2 copies are given to the customer, and the 4th copy it goes along with the material to the dispatch section. Now, what does the customer do? The customer goes with these 2 bills to the cash counter, he makes payment, he gives both the bills, one bill is returned to him with a stamp cash paid, and the other bill copy is retained by the cash counter. Now this copy which is returned to the customer, that copy would be carried by the customer to the dispatch section. Now when customer is going through this procedure, the material with one copy of the bill would be sent to the dispatch section, and in the dispatch section when the customer comes, he will come with a paid bill. Now that paid bill would be retained by the dispatch section and his material would be handed over. Now here we have seen that a perfect internal control system is functioning as far as sale is concerned, because the person who is showing the material, he is a salesman, his job is only to show the material and convince the customer that this is good. Once that is done, the bill is not done by him. So he has absolutely no control as to what bill is to be made. That will be made by the billing department. The billing department, it only makes the bill. It does not receive the cash, it does not deliver the material. So there is no question of taking any extra cash or lesser cash, and there is no question of giving any extra material, because the billing section person has no control over it. The cash section takes only cash, it does not do anything else, and it retains a copy of the bill. The dispatch section, that is the fourth one in the chain, it only dispatches the material. It takes the paid bill and it gives the material. So at all points, unless all these four people in different departments, they commit an error, the chances of an error taking place are very, very remote. And the chances of fraud are also very, very remote, because unless all these four people collude, there is no way a customer can be given material at a cheaper rate, or a customer gets say 2 pieces and he is billed only for 1. There is no possibility of all these things. So this is a very good example of how an internal control functions. Now here the proprietor, the owner, he does not have to really bother about each and every transaction. It is not possible also. So what he has to see is whether all these people are properly working or not, because he has already set up an internal control system which should function. So what the auditor will do is, he will see in each department what is the internal control system which is functioning. I have given you an example of the sales department. There can be an internal control system in the purchases department also. Again, it depends on the size of the organization, depends on the volume of transactions. If it is a big organization, then naturally the purchase department will also have a very good internal control system, like they would be floating tenders, they will be opening the quotations, there will be a separate committee which would be formed for purchases, they will open the quotations, they will see the criteria on which they have to make purchases, then they will place an order. So here the person who is indenting for the material, the person who is actually taking the quotations, the person who is opening the tenders, all are different people. So the chances of error again get reduced. So I have given you 2 examples where there is a perfect internal control system functioning. So what the auditor has to do is find out different areas where there are internal controls, and if there are internal controls, whether they are functioning properly or not. That is very important. If the auditor feels that there is a weak link in the entire internal control procedure, then he will formulate his audit program basing on what the weakness is. His thrust would be on the weak point. We will come to this point when we discuss the actual audit program. Now I have told you that what the auditor will do is, once the master file is created containing vital information, he will go through each organization to find out what is the internal control which is functioning. Now once this job is done, then the auditor, the senior auditor who actually has control over this audit, he will have to start forming an audit program. Now what is an audit program? Again, this is a step which is just before the audit. Unless you have something charted out for you, it is not easy to do a good job. So what the audit program does is, it will give in a nutshell what is to be done. Now let us go through the points which have to be kept in mind when you are actually formulating, drafting an audit program. To prepare an audit program, what the auditor has to do is he has to lay down as to what is the scope of his audit, what are the areas which are to be covered and what is the extent to which they are to be covered. Then he also has to lay down what is the evidence required for each and every part of the audit. The third point is regarding allocation of work to his assistants. He has to decide as to what he himself has to do and what his assistants will do. Again, there will be a categorization. The senior assistant would be assigned a job which is more important. A junior assistant who has just started his training, he will be given routine checking jobs. So, he has to decide about the time schedule as well as the work allocation part. Then what he has to do is, what are the reporting requirements? He also has to lay down in the audit program that yes, this is an audit being conducted under the Companies Act. These are the legal requirements which are to be looked into. For instance, I will give you another example. If a person is doing an audit under the Income Tax Act, he will have to know certain provisions. So, unless the assistant, the audit assistant knows what are the legal requirements, what is the format of the audit report which ultimately has to be given, he will not be able to do a good job. So, he will have to, the audit program will have to lay down the reporting requirements also, the legal provisions which should be considered when he is actually doing the audit. Now, once these things are there, he will prepare an audit program. I have given you a small sample audit program. Now, this sample audit program has different columns. The first column is the nature of work, the second column is the scope, that is what is the scope of the work, whether you should do it 100%, whether you should do it for 6 months or 3 months or sample checking. The third column gives the number of days allotted for a particular work. The fourth column gives the number of days taken actually by the audit assistant. Then the next column gives the name of the person or persons who have actually done this work, and the last column is for remarks. Now, the audit, as I said, the audit program will also give the details of the work to be done. In my audit program, I have included these things: cash receipts and cash payments. The auditor thinks that entire 12 months are to be done. The time allotted is 2 days. Similarly, the next point is regarding bank receipts and payments. 6 months vouchers are to be vouched and the time allotted is only 1 day. The next point is sales. Here the auditor thinks that the first and last 3 months should be audited, should be vouched. Purchases, entire 12 months, because when studying the internal control systems, maybe the auditor thinks that this area is weak. So, let me do entire 12 months audit. So, this scope of audit is definitely dependent on the controls which are existing and which have been studied by the auditor. Similarly, journal entries, debit and credit notes, inventory, ledger scrutiny and finalization, each and everything is given a specific time. Now, once the audit program is prepared, work is allocated, people are allocated, time schedules are given, the actual audit work starts. Now, in this audit work, again there are different types of verification which are done by the auditor. The first one is the routine checking, that is every voucher is gone into by an assistant. Then there is test checking. If the auditor feels that no, 100% audit is not required, then he will go through these things on a random basis. He will pick up a few transactions, he will complete them right from the beginning till the end. Then there are surprise checks. For instance, when we are doing the audit of a bank, we do cash verification on a surprise basis. We do not inform the banker, we suddenly go there and ask for the cash. So, that is a surprise check. Then there is ledger scrutiny, which is very important. Each and every folio of the ledger, each and every account has to be gone through. Information from outsiders, from customers, from suppliers, the auditor has an authority to write directly to the customers asking for confirmation of balances. So, this is one type of verification. Then once all these basic things are done, the auditor will do a comparative analysis. A comparative analysis between 2 years, between 2 quarters or between 2 half years, that will throw up a lot of data on the variances, and then he can again concentrate on areas where there is a lot of variance. Then the next point is ratio analysis. This is also a very important tool, very important part of the audit procedure. He has to do that. Physical verification for cash, investment and stock, that also has to be carried out. Now, once all these things are done, the auditor will have all preliminary information with him. Based on this information, he will prepare an audit report. Now, the contents of the audit report would vary depending upon the nature of the audit. As I already told you in the beginning, if it is a company audit, if it is a statutory audit, there is a fixed format. If it is an audit under the Income Tax Act, there is a fixed format, there are fixed columns. You have to fill up those columns, and if the auditor wants to make a qualification, then in his main audit report he has to make a qualification. If he is not satisfied about anything, then he can give a disclaimer. He can say that no, I am unable to form an opinion, that is called a disclaimer. A qualification is slightly lesser or lesser than a disclaimer, because a disclaimer says that even though I have verified everything, I am not able to form any opinion, whereas a qualification would concentrate on a particular point, that I am not satisfied about these cash vouchers, I am not satisfied about inventory, but subject to this point the accounts give a true and fair view. So, when he drafts his audit report, he has to take into consideration all these things, and he also has to take into account all the legal provisions which must form part of his audit report. Now, in the case of a manufacturing company, if it is a private limited or a public limited company, there is a manufacturing and other companies auditors report order. Now, that has about 20 points. All those 20 points should be covered in his audit. On all those 20 points, he has to give a specific answer. That is part of his audit report. If it is any other audit, the sales tax audit or the cost audit or audit under the IT Act, again the formats are different. So, keeping in view all these formats, keeping in view the legal provisions, he will have to draft his audit report, and once he submits the audit report, his job is over. So, the procedure which starts with the appointment of the auditor would come to an end with giving of the report by the auditor.